Hey guys, in this video I want to talk about 3 strong buy stocks that I just added to my portfolio. And if you guys don't know, a strong buy stock basically means that the stock is heavily owned by institutions and insiders, and it also has a larger price target. So me as a full-time trader, by the way, this is not financial advice, and I'm not a financial advisor. I'm just a full-time trader. I look at these stocks, I look at their price targets, and I choose the ones that actually make sense to me. So these 3 stocks that I'm about to mention has a price target of 100, 200%. So basically means that they can double or triple. So let's get right into it. So the first stock, it's an oil and gas company. The ticker symbol is PHX. 18% owned by insiders and 45% owned by institutions. It's pretty massive. The market cap is at 35 million, which usually means that the stock itself is riskier just because the market cap is so small. But at the same time, once it breaks out, it has major potential to get 100%, 200%, or more just because the market cap is small. If you put 35 million into the stock, it will make the stock double. So that's one of the good things about having and trading stocks with lower market caps. The average volume is 160,000, which basically means that the stock itself is pretty undiscovered. The highest price of the year was $13 on the stock, and right now it's traded at 1.7 with a price target of $26 to $30. And that's why this stock is a strong buy. Heavily owned by institutions, heavily owned by insiders, and it has a larger price target. Right now it's closer to the lowest point of the year, and I bet that's the reason why the insiders and the institutions are buying this stock right now. They assume that right now is the best time to buy the stock. This is the dip area. This is the lowest part. Remember that there is a lot of stocks that once they go under the dollar, they face a risk of delisting from the stock market. So sometimes the stock would delist from the stock market, and sometimes they would do a reverse split where basically if you have $1,000 into the stock and some amount of shares, they're basically going to reverse that. You're going to have the same $1,000, but instead of 50 cents, the stock would go to $5. So I recommend for you guys, if you are going to do your research on PHX and you decide to add it to your portfolio, go to finviz.com and follow up with the stock with the price target and make sure that price target hasn't changed. And at the same time, you don't have to wait until it exactly hits the price target. Let's just say you add it to your portfolio at 1.7 and then the next morning it's $5, hypothetically, right? You don't have to wait until it hits the $30. You can sell it at $5. Next in our list is another oil and gas company. The ticker symbol of the stock is RNET. Market cap is 90 million. Now this one is not as heavily owned by insiders. It has less than 1% at the moment, but it's 76% institution owned. Some analysts have the price target as high as $60. And right now the stock is trading at $4.75. Another thing that's important to look at is short float. Short float can say a lot of things about the stock. If a stock has a bigger short float, it means that more people are betting on the stock. But at the same time, once it comes out with good news, it can create a multi-day breakout because all these shorts are going to be squeezed. They're going to have to close their position and they're going to get a margin call. Okay. So I don't know if you guys know that or not, but to close a short position, you have to buy back your position. So that's why a short squeeze can be a multi-day breakout because all these accounts are closing their positions. Now for RNET, the short float is 6.6% at the moment. So it means that it has a small potential to break out. I don't see it really becoming a crazy multi-day breakout, but at the same time, we don't have as much as people betting against this stock, which is a good thing. Average volume is under 500 million. Right now, it's 259,000, which means, again, the stock is pretty undiscovered. Now, the last stock in the list, ticker symbol MRAM, company with market cap of 111 million, which is, again, under the 500 million, which means it's a smaller company, but has a major potential. Now, when a stock like this is owned heavily by institutions, and we're talking 52% owned by institutions, 2.29 short flow, average volume is 195K, and the price target is $15 to $18 at the moment, which is, again, it's insane for a stock like that. Because right now the stock is trading at the $6 levels, and it doesn't even have to hit the 15. Imagine it just hits the $12 overnight. You doubled your investment. Now, I know some of these stocks you active traders have seen before, probably breaking out. A lot of these stocks break out multiple times. Those micro-cap stocks always come and go because it's smaller companies with not a lot of products and not a lot of income that's coming in their way, and usually their stock go down for the most part. But then when there's some news that are about to come out or some insider information, the insiders, the institutions are starting to buy it up, give it a higher price target. Now, once institutions buy the stock up and they give it a high price target, it makes other investors just jump into the investment without even doing their research. So that's why it has a higher potential of breaking out. That's why it's good to have a lot of these stocks in your portfolio. That's why if you have a higher portfolio of, let's just say $100,000, you can have like 100 of those, you know, and then one of those is breaking out overnight. Overnight, you get a 500% profit. You turn that $1,000 into $5,000. That's why I always say greed in the stock market is always what stops people from profiting. So you have to think smart and don't listen to your bad intentions that tell you to make stupid moves that won't make you money, because that's, I mean, in my opinion, that's why most people lose money in the stock market. They get greedy and they make stupid decisions. That's all it is. But I'm a full-time trader. Again, not a financial advisor. This is not financial advice. I'm just a full-time trader and I buy stocks that make sense to me. And whether they make sense to you, that's your own choice. Do your own research on them. But I want to thank you guys for watching the video. And if you like it, please subscribe, thumbs up, help me spread the word out. And until the next one, guys, thank you guys for watching. Peace out.